Welcome to the Smarter Money Life, powered by Forum Credit Union, where we dive into the world of smart financial decisions that can help you take control of your money to live a more fulfilling life. Whether you're looking to save more, invest wisely, or simply manage your finances better, we've got you covered. Our organizational purpose is to help you live your financial dreams. So sit back and let's get started on your journey to financial success. Hi everyone, welcome back to the Smarter Money Life powered by Forum Credit Union. I'm Andy Mattingly, and today we're diving in a really fun topic, especially if you're starting out on your own. It's the smart money moves that you need to make sure you're doing. Now, there are many responsibilities and new experiences when you're living on your own, and one of the most important is handling all of your financial matters. Building a strong financial foundation is the first step in achieving all of your lifetime goals. So today we're going to discuss 5 key strategies of personal finance that can help you get started on the right foot. First and foremost, start a savings habit. Aim to have at least 6 different savings accounts and to save at least 13% of your gross pay in these funds. Now that may sound like a lot, but when you first start out, if you start doing this, you're going to make sure that you have the funds to do all the things you want. So, these accounts can include your health savings account, vacation travel fund. All of these should be some of your 6 funds that you do. Remember, your accumulated balance should drive your spending decisions because you're saving for certain things in these accounts. Next, start building your retirement fund. Your goal should be to save at least 10% of your funds annually for retirement. And when you're including your employer match, maybe you aim for 15% or more. Consider saving outside of your retirement plan for the future, especially if you have commission income, which requires more discipline to reach retirement goals. Starting early means you'll contribute less to reach your goals because you've started so early. Now, this next strategy is so important and people sometimes miss this, and it's developing a realistic budget because, having a balanced monthly budget is more important than your individual categories of performance. So review at least 3 months of previous spending to set your budget goals and look for ways to trim expenses or increase your income. And saving should be part of your budget. So we talked about that 13%. You should make sure that's included in there. And then you should also budget for non-monthly expenses each month and save it until you're needed. And if you always make spending decisions based on your budget, you'll be able to keep your budget in line. And this is another part of making sure your budget stays in line. It's add debt very slowly and wisely. Each type of loan has a maximum repayment timeline for best debt management. So if you put something on the credit card, that should be a short term. You have a car loan, there should be an amount of time. A home is going to be a little longer. And your budget, as we talked about before, is the tool for you to decide how much debt you can really take on. And if you have student loans, you're going to have to put those into your budget and manage those as well, especially before adding a lot more debt, or you can create a situation that's just not manageable. Because paying loans late is one of the primary ways to harm your credit score, which is the 5th kind of personal finance strategy, and that's actively manage and build your credit score. Your credit score is a major factor in determining if lenders will approve your loan, at what rate, and it's really easier to have a good score by not having a poor credit score that you start with that needs to be repaired. So remember, even medical bills and other service providers can impact your credit score. It's not just loans. So a lot of lenders have credit starter and credit repair programs that can be beneficial. So look into those. And also remember that other expenses like insurance can be increased if you have a poor credit score. So managing your credit score is so important besides just loans. And finally, remember, building a strong financial foundation really is the key to achieving your lifetime goals and doing the things you want to do during your entire lifetime. Thanks for joining us on Smarter Money Life. I hope you found today's tips and insights useful. Remember, smart financial decisions can lead to a brighter, more secure future. If you enjoyed this video, give us a thumbs up, subscribe to our channel, and hit the notification bell so you never miss an update. Share your thoughts and questions in the comments below. We'd love to hear from you. And until next time, keep striving for financial success and living your best life.